Hey, what's up, YouTube? All right, I'm back here with another tax reform video. So in this one, I'm hoping to provide you all the information you need to be able to plug in your numbers and then figure out how the changes would impact you based on your own individual tax situation. That's kind of what I'm shooting for in this video here. So as far as where everything stands, the House and the Senate, they've both passed their separate individual bills. Now there's going to be committees that get pulled together to create one bill that will again still have to go back through the House and the Senate to get passed and then be pushed up to the president for him to sign. So more than likely the Senate bill is what's going to come out of those committees or something very similar. There may be a few tweaks, and the reason for that is the Senate has a smaller majority, so it's 52-48 in the Senate. So the Senate can afford to lose 2 Republican votes. That would make it a 50-50 split, and then Vice President Pence would come in for the tiebreaker. So they can afford to lose 2, but no more in the Senate. So that's why more than likely it's the Senate bill, something very similar, should come out of the committees. Now, as far as when it's going to take effect, it will not impact your 2017 taxes that you're getting ready to file in a couple of months here. So it goes into effect the 2018 tax year, and you would file those in 2019. That's when it would go into effect if it does pass. As far as just a refresher here on the Senate bill, so standard deduction goes up to $12,000 for single, $18,000 for head of household, $24,000 for married filing jointly, and that married filing separately is going to be that same single rate of $12,000. Your exemptions go away. Child credit goes up to $2,000. Now I did find out the additional $1,000 they're adding to that child credit is going to be non-refundable. So obviously you can still use it to reduce your tax liability, but you won't get it back as part of that additional child credit as far as a refund. The first $1,000 you will, the second $1,000 is just non-refundable. All right, now they do have a non-minor dependent credit of $500. That's going to be for any dependent you can claim that's age 18 or over. Now, one thing with these numbers as well as the tax bracket, so it's set to expire in 2026, meaning 2025 would be the last year that these numbers would be in play. So what most likely will happen if everything goes well, depending on the presidency in a couple of years here, the Congress can vote to extend these rates and these limits, or they can go ahead and vote to just make them permanent. So that'll happen down the road. Now, as far as the itemized deductions, so the Senate bill is much more favorable to the itemized deductions. They're still going to remove the state income tax deductions. There have been talks of putting in a limit for that through the committee, but as of right now, it's eliminated. Your local property tax, you can deduct up to $10,000. That was actually added in. They were initially going to have that eliminated as well, but they added that back in. So just to give you an idea, the average property tax is around 1.15%. Obviously, that's going to vary depending on where you live. So that comes out to an assessed value based on that $10,000 that you can deduct of a little over $869,000. So if the value, the assessed value of your home is $869,000 or less, you'll be able to deduct that full $10,000, whatever your number is, up to that $10,000. As far as the mortgage interest, it's going to allow any interest tied to the first $1 million of your mortgage to be able to be deducted. You're no longer going to be allowed to deduct interest on home equity lines of credit. That kind of goes away for that interest deduction. Now, one thing that's not going to affect you year to year, but is impacted on your home is the 2-year threshold. So capital gains on your primary residence, you have to be in your home 2 or more years. And then when you go to sell, I think there's a certain limit. I think it's maybe $500,000 that you get back tax-free as far as a capital gain, as long as you're in your house 2 or more years. They're looking to bump that up from 2 to 5 years. So you have to be in your house 5 or more years for that tax-free deduction on capital gains to still kind of come into play. As far as the estate or death tax, it's going to remain, but they're going to double the limits, which basically almost eliminates it completely. As of today, the rates or the limits, only 0.2% of taxpayers are impacted. So with this, virtually no one's going to be impacted, so it's almost like eliminating it. The alternative minimum tax, it was going to go away, but they amended it to keep it. However, they will increase the amount of income that's exempted from this. I wasn't able to find out how much, but they will increase the income that's exempted from the alternative minimum tax. Teacher supplies, they're just doubling it from $250 to $500 that they can deduct. Medical expenses, they're lowering the threshold. So currently there's 10%. Anything above 10% of your adjusted gross income you can deduct. They're dropping that down to 7.5%. So a quick example, you have $100,000 adjusted gross income. You've got a total medical expense of $10,000. That means you can deduct $2,500. So the first $7,500 you still have to pay out of pocket, but that additional $2,500 you can now deduct. Now the last big one here, the Senate bill currently does eliminate that individual health insurance mandate and the penalties tied to that. So that's that Obamacare mandate. So currently it does have it in there to eliminate that mandate. All right, now as far as the tax brackets, the Senate bill, remember they want to keep all seven. They're going to bump down most of the rates and then alter the limits slightly. But again, more income, your higher income anyway, is going to be taxed at a little bit less rates. I mean, between 3 and 4%. Nothing huge, but it will help. Now again, these are set to expire starting in 2026. Again, they only go through 2025. Again, the Congress can vote to extend or make them permanent. Now, as far as your examples, so before I get into these, so a big thank you to all the comments out there. So I pulled these straight from the comments. These are some examples from there. So in the first one here, you got a $40,000 income. You're married with 2 kids. So you can see the standard deduction and the exemptions for 4 people. So 4150 times 4, that's your 16,600. Taxes owed in this example is 1038. With that low amount of taxes, your additional child tax credit and the earned income tax credit both come into play. So when you add all that up, as well as that $4,000, which is just 10% withholding, so you add all those three together and you get 7,188 as far as a refund. Moving over to the Senate bill, you fare a little bit better. You get 8,226 back. Again, that's kind of credited or accredited to that increase in the child credit of going up to 4,000 with 2 kids instead of 2,000. So that's kind of where that additional bump comes from. The next one, head of household, 3 kids with a $31,000 income. You can see the deductions and exemptions. So on this one, again, taxes owed is extremely small, 483. So your additional child tax credit and your earned income tax credit are going to both come into play. Now the earned income tax credit is going to go up. You have 3 kids and head of household, so that's going to increase slightly. So in the current system, you get back 9,264. Over in the Senate bill, you'd fare a little bit better again. You get 9,747 back. Now, the next one is going to be starting to show an example of itemizing. So you're married with 1 child and you itemize. So what I did is, you can see in the current system, the itemized deduction was $34,000. Over on the Senate bill, I took out $5,000 just as an estimate as far as what your state income tax would be. So that's where the difference from 34 to 29 comes from in the examples. So in the current system, this person would get a refund back of $2,459. Now you look over the Senate bill, they're still going to get a refund, but it's going to be slightly smaller because of that itemization reduction from the state income tax. So they're not going to get back, or they're going to get back $278 less. Not a big deal, but a little bit less. All right, next one here, you're going to be single and still itemized. I kind of use the same numbers, just changed it to the single tax brackets and rates. So in this one, and I did 10% withholding, so they're going to get back in the current system pretty much no refund, $5. Over on the Senate bill, you can see where those itemizations start to kick in here, especially with no children. So they would get back, they would actually owe $600 in this particular example because of that missing $5,000 from your state income tax, being able to deduct that in your itemized deductions. All right. Now, moving on here. So again, like I said, I want to try to help you guys with your own individual scenario, your tax scenario, whatever your numbers are. So I put some notes up here. You can pull out your 2016 tax return, or you can wait until you finish your 2017 return if your numbers have changed quite a bit, and then wait until you get that done and pull that one out. Look on your 1040, your tax return, and here's some notes as where you can find some of these numbers. You will have to make a couple of changes, especially if you itemize. You're going to have to take out, look on there, and I put what line it is. What is it? Line 5A. Now this is on your itemized deduction worksheet. So line 5A is going to have your state taxes. You need to remove that completely. And then line 6 is the one that has your property tax. So if you're under 10,000, just leave that alone. If you're over 10,000, you'll have to bump it down to just 10,000. Now, I was going to walk you through how to do the tax brackets and all that kind of mess, but luckily, big shout out to Jay Flores Drums in the comments. He included a link that takes you out to a tool that makes this extremely easy. You just need to have a couple of your numbers, and it will actually, you plug those in, and it shows you the current system, the House bill, and the Senate bill, all three lined up nice and neat where you can see them. And we're actually going to go out and check that out here real quick. So I've got it all queued up here. So we're going to go out to the site. All right, so this is what it looks like when you first get there, okay? So you got a couple of inputs here. You've got income, what state, if you're married, or what filing status, and if you itemize, okay? And then your children and other dependencies down here. So this first example here I've got queued up. It's $100,000 income. You're in California, married, filing jointly, and do you itemize? No. So we're going to use the standard deduction, and you have 2 children. And then you just click on see results, and then bam, it just pops up the 3 different scenarios. So you got the current system, You got the House plan and you got the Senate plan. So a huge shout out to Maxim Lott who put this together. I mean, this tool is amazing. It's a couple of inputs. You click one button and it shows you side by side how you're going to fare. Okay, and then to play with it, you can just go back, change some of the numbers. So let's say you make 50,000. Okay, 50,000. Let's change it to. Let's go to you're in Florida. All right, and you file as single. You're still going to use the standard deduction. Let's put you down with no kids. All right, see results. All right, and then this up here. So this up here is your taxes owed savings. This is not your refund. This is your taxes owed savings. To figure out your refund, you need to obviously know what you're withholding with your taxes withheld during the years. And you come down here to the bottom, and that'll show you what your tax liability is. So that's your taxes owed. So you take your withholding, you subtract this amount here, and that'll tell you if you actually owe or if you're going to get back a refund. So this number, this savings up here is your tax liability savings, not your refund. There's that one extra step you got to do, but other than that, this basically calls out each individual thing that you used in the calculation, so you can go line by line to figure out how this number came up. And again, it's very simple to go in and change the numbers. So let's say I'm now in, let's say Colorado. Let's go back to married filing jointly with one child. Now let's go ahead and do the itemized. So let's say, yes, I do itemize. Now in here it tells you, you need to, because of the calculations and everything, you need to take out your local and state taxes. So your state income tax, take that out, and your property tax, take that out, like I showed you in the numbers, and then plug the remaining of your itemized deductions in. So let's say it's 40,000 when you do all that, and then it says here, what is your property taxes? Well, you can, if you look at your itemized sheet, you can get the exact number. So let's just say it's 5,000 in property taxes, and then you just click see results, and it's going to start showing you. I mean, this tool is amazing. You basically plug in your numbers, and it's nice and quick and easy. There's no calculations on your part. You just find some of your numbers, and then you figure it out. So again, this Maxim Lott, he created this and all the information. So a big shout out to him. This is going to help a ton of people. All right. So just kind of going back now to finish this up here. So this kind of, I'm pretty sure this will probably be my last video on tax reform, and the only reason is there's probably not going to be too many changes from here on out unless there's something drastic that happens. So this will do it for tax reform. However, I will still be making videos, so please feel free to go ahead and subscribe, get those numbers up, and then let me know what kind of videos you guys would like to see. Again, I'm a numbers guy, so anything around mortgages, how to figure those out, the impact of changing rates or changing down payments, anything like that, anything around budgeting or financing as far as credit cards, a car finance, anything around numbers. So just shoot me out your guys' ideas for future videos, and I'll go and put those together and share those with you. So until then, again, guys, thank you. Been awesome, the support, and we'll see you in future videos.